Hello, welcome. Thank you for joining us again on this edition of the program. I am Frank Omalape. Here's what coming up on Business Week. Vice President Senator consistent with each 2% inflation target. Of this and many more, what to expect on the show today. Thank you for joining us. Thank you, everyone. Let's begin with the major stories that made headlines in the week. Vice President Senator Kashim Shettima is imploring African leaders to work towards ramping up the total $3.1 trillion GDP of countries on the continent, amounting to 3% of the overall global GDP. According to the Vice President, the total gross domestic product of African countries taken together is barely $3.1 trillion, which is less than 3% of the world GDP. The VP gave the charge during the African Economy of Scale plenary on the sidelines of the ongoing World Economic Forum in Davos, Switzerland, and regretted that African trade was still hovering around 3% of world trade. In his brief remark, the Vice President told African leaders those economies of scale portend the ability to do more by coming together and form a more formidable unit with a bigger voice and stronger negotiating abilities. Anyway, from there now, the Central Bank of Nigeria says it has paid approximately $2 billion in its bid to clear the backlog of outstanding foreign exchange liabilities across various sectors. People's Bank, in a statement by its acting director of Corporate Communications Department, Mrs. Hakama Sidi Ali, in Abuja, said the benefiting sectors include manufacturing, aviation, and petroleum. The bank cleared up the entire liability of 14 banks and started settlement with foreign airlines, adding that it will continue settlement of verified FX backlog. However, a credit ratings agency, Fitch, has stated that the CBN is still facing a shortage of foreign exchange to clear the forex backlog. The country's high debt service to revenue ratio is also contributing to a challenging sovereign credit rating, according to Fitch Director of Middle East and African Sovereigns, Mr. Gaimin Noyane. The ongoing foreign exchange shortages in Nigeria will expect or exert pressure on the Naira as the current disparity between the official and parallel exchange rate is at 30%. While emphasizing the resolve of the CBN to sanitize the financial service sector, Mrs. Sidi Ali noted that payment of the FX backlog for qualified transactions had commenced and that the CBN had commissioned an independent forensic review by a reputable firm. Also, in the course of the week, stakeholders have called on government at all levels to stop corporations from exploiting workers, evading taxes, and creating a harmful environment in the pursuit of massive profit. The stakeholders believe this measure will reduce inequality and pave the way for a more equitable and sustainable global economy. Uloma Nyimichi reports.
In the world economy, a major issue highlighted in the 2024 economic report is monopoly of the market. This imbalance paints a stark picture of the rich getting richer and the poor getting poorer. According to the report, almost 5 billion people worldwide have become poorer since 2020, projecting that if things continue at the current pace, it will take 230 years to eliminate poverty. This revelation serves as a clear call to action, urging governments and key players to address this inequality.
Globally, the world's 5 richest men have more than doubled their fortunes from $405 billion to $860 billion since 2020, at a rate of $40 million per hour. I mean, these 5 men, they are more or less, earning $40 million an hour.
The absence of proper taxation system in the country is also one of the very reasons why government is losing a lot of money.
Stakeholders insist the Nigerian government needs to intensify its effort against corruption.
So there's no way you can address poverty and inequality with that kind of mismanagement of governance in Nigeria. So we must sanitize electoral process because we are under democracy.
If inequality persists, what we would have is anarchy. Today, the Nigerian people cannot enjoy service delivery or social amenities. Over 5 trillion naira was given as tax heaven. This is unacceptable.
Kidnapping has become a business in our country. We are all witnesses to it. And the duty bearers are doing little to check it because somehow it still trickles back.
Highlight of the event was the unveiling of the executive summary on the 2024 World Economic Report. Still on boosting the economy across the world, Nigeria's Vice President Kashim Shettima is currently in Davos, Switzerland, to engage with global leaders on socio-economic issues, which is why public discourse and engagement such as this is very vital to highlight the need to tackle inequality and alleviate poverty across the world. Uloma Oyemachi, TVC News, Abuja.
And away from there, vandalism and theft of government infrastructure will no longer have a place in Lagos State henceforth, as this has become a major threat to public infrastructure in the state. This is the position of stakeholders at the one-day engagement forum organized by the Lagos State Electricity Board. Details in this report. This meeting has brought together various stakeholders, including operators, government officials, and representatives from the private sector to find solutions to the persistent challenges that have plagued the public infrastructure for decades in the fifth largest economy in Africa.
To actually look at how we can better manage our infrastructure and how you can help us to deal with all of the vandalisms that have been happening in recent times.
With a call to action, the government, private sector, citizens, and the community have been asked to work together to implement a roadmap for the protection of high infrastructure in Lagos State.
We are going to take our time to make sure that the city gets the best from us as a team, and I can assure you that issues around vandalism and all that will be addressed as we implement some of these suggestions that has flown out of these sessions.
Looking at the rates, because the rates helps us to put more people on the field, it is invariably cheaper when I look at the corrective maintenance cost vis-a-vis how much we're spending on security at the moment.
We have a control room. If you call a division, an area command, and nobody's responding, call the control room. The control room will in turn call either the area commander or the DPO of that very place.
According to the Lagos State Electricity Board, over 500 incidences of vandalism and theft have been recorded between 2019 and 2023. Further report shows that in 2023, the board received over 250 complaints, made about 41 arrests, prosecuted 35 and secured 29 convictions, and this has led to lots of revenue eating into the economic fabric of the state.
That the difference between the arrest and the prosecutions could have been, of course, because sometimes these vandals are underage, and underage persons cannot be prosecuted in the regular court. So it becomes another challenge that we have to face.
It looks as if the institutional linkages are a little bit on the weak side. We'll look at the details and we'll ensure that we strengthen them. All our partners must come together to make sure that all our public infrastructures are the best that is people who are in the city can experience.
With a renewed commitment to collaboration and innovation, it is expected that the strategies proposed at this forum, when fully implemented, will foster a more efficient and reliable system in Lagos metropolis. And outside Nigeria now, workers in Europe are hoping this year's pay round will help restore incomes eroded by higher prices, but the expected boost to their purchasing power could hamper the European Central Bank's efforts to bring inflation back to target. The European Central Bank has singled out wages as the single biggest risk to its 1.5-year crusade against inflation. It expects salary growth across the Eurozone of 4.6% this year, far more than the 3% pace it considers consistent with inflation at a 2% target. According to analysts, higher wage settlements will be a risk to interest rate cuts that financial markets are betting will start in April. And still in the course of the week, French President Mr. Emmanuel Macron backed the issuance of joint European debt to pay for priorities, including defense and technology, to ensure Europe remains sovereign amid increasing competition with China and the US. The French leader also said the European Union had to deepen the capital market union for a more integrated financial system. Also, UN Secretary General Antonio Guterres said big technology companies are recklessly pursuing profit from artificial intelligence and called for actions needed to mitigate the risk from the rapidly growing sector. Those were some of the biggest stories in the course of the week. And coming up in a moment after this break, we'll focus on the depreciation of the Naira against the US dollars as the exchange rate continue to rise. But that's our talking point when we return from this break. Please stay with us. Thank you, everyone, for joining us. Let's get into our conversation for this week. The Naira dropped to 1,300 Naira to $1 at a parallel market in the week. This is at its close trading on the pair-to-pair cryptocurrency window at 1,315 Naira to the dollar on the same day. On the Binance pair-to-pair platform, the Naira closed at 1,315 Naira, 3 kobo to the dollar. And according to Chain Analysis, a blockchain firm, Nigeria has one of the largest pair-to-pair exchange volumes in the cryptocurrency market. While details from the FMDQ OTC Securities Exchange says the Naira closed trading at 878 Naira, 57 kobo to the dollar on the investor and exporter window of the foreign exchange market. For more perspective on this conversation, I'm joined by development economist Mr. Gospel Obele. He joins me virtually from United Kingdom. Thank you, Mr. Obele, for joining us. Let's start by looking at the various interventions by the CBN in the FX market. Despite these interventions, well, we could see that the local currency has continued to depreciate against the greenback as the dollar exchange for more than 1,300 Naira to the dollar in the week. So why do you think this is so? I think we should start from there.
Well, it is to a very large extent because, thank you once again for having me. It's to a very large extent because the interventions that have been introduced aren't dealing with the real issues. You know, our interventions are largely short-termist. I mean, think about when somebody has a wound now, you need to actually treat the wound for it to heal properly. But what we have in the case is, you know, we're trying to patch the problem. You know, you don't just apply plaster on a wounded area. It's going to worsen the injury itself and maybe even damage the skin. And that's what's happening. Many of our interventions are very short-termist. They don't deal with the root causal dynamics of the value of the currency. And when you talk about the root causal dynamics of the Nigerian Naira, it's hinged on two conditions. The fact that, number one, we need a local thriving economy, you know, built on production to a large extent, all right, and also facilitating not just made in Nigeria, but encouraging the exportation of locally produced items within and across borders. That means we have chocolates in Nigeria, we're transforming those chocolates we have cocoa in Nigeria, we're transforming that cocoa to chocolates, and those chocolates can be sold in the UK, in Zurich, in New York, and all of those places. So you get people that are even of other ethnic backgrounds buying and patronizing our product. So until we can facilitate that level of exchange and productivity as a nation, the Naira will not gain its right value. And also speaking to the fact that there's a secondary condition where we are managing and institutionally lobbying for the place of the currency within local, international, and regional markets, all right? So until those two grounds are fully achieved, you know, at a level of growth and at a level of scale, we may not be able to get to a point where the Naira is truly reflective of its value. And on the counter side of this argument is that the Naira will be truly devalued as we move on consistently, as we've seen in the last 2-3 years, because we're not dealing with the core issues. And safe to say as well that the CBN policies, now, as much as they're short-termist and they're not really dealing with the issues, you also have a challenge where the fiscal authorities are driving policies that are very inconsistent and incoherent with what the central bank is trying to achieve. Or there has to be a more phased approach, you know, and a more strategically long-term view of executing that type of policy, not a one-off announcement that is sort of, you know, leading to market speculation and all of that. So realize that all of those policies by the fiscal authorities have ended up impacting, you know, and hindering the lead to benefits that the monetary institutions have been able to drive with its own give or take short-term policies as well. So you still have that disjointed approach towards what it is exactly we're trying to do as a national approach, a national strategy towards enabling the local currency, which again should be hinged on productivity. Anything such than that or short than that would likely be counterproductive for the Nigerian economy and the people.
The Apex Bank stated recently it has cleared around $2 billion of the backlog of FX forwards to companies, and estimate the total backlogs is in the range of $7 billion. So just wondering, how much pressure would this have on the Naira, bearing in mind that this might put a strain on liquidity in the forex market?
Well, it's quite worrisome that we even have these backlogs to start with, because it indicates to us or shows to us that the economy has been poorly managed, and we've seen the rise of cases and investigations that have gone on in recent times on the monetary institution or the past executives who managed that institution, and even fiscal authorities as well. In terms of how their policies, body language, and engagement with the Apex institutions have collaboratively led to a destruction of the economy. So that's first and foremost one thing that needs to be accepted as a major problem that we have. Secondly, yes, it's going to put a lot of pressure, because there is that need to sort of clear those backlogs, and then the whole scarcity today, availability tomorrow, dynamics of how the currency or the dollar is even moving is also impacting on how stakeholders are pitching the FX. So we now have a situation where Nigerians are even agreeing on what rates they want to sell, from Mr. A to what Mr. B. There is no central. So the idea of parallel market is now so decentralized that individuals now agree on the rates that they want to sell to themselves. So it's that bad that there is no pegged rate that people facilitate business transactions or exchange on. So having said that, the backlog still needs to be cleared, but there has to be, in view of clearing that backlog, what is the most sustainable approach to managing the dynamics of the Nigerian currency. And the most sustainable approach is going more productive. So whilst, and to a large extent, we've also not seen traits of efforts to be a productive nation, because a 2024 budget, you want to talk about how much really investments are going into infrastructural capabilities, into industrialization core, into supporting the manufacturing sector, which again is stricken by worsening position of the monetary rates as it stands right now. So how are you enabling more businesses, and how are you facilitating industrial growth so that you can build local, and then also create access to market solutions to scale, within and across borders? Those dynamics are very critical for sustainability of the national currency. So even if we clear the backlogs, it may impact on the exchange rate positively, but you still find out that it will not, the Naira will still be in a place, the Naira will still be at a reasonable place where, for a currency of that kind of economy, should be valuable enough for doing business. All right. So these are the, growing thematic arguments or issues that are evolving in these conversations. And it would be best to begin to think about how we clear the backlogs and how we begin to move an inch or a step towards sustainability. Because you don't want to clear the backlogs and you're back again with the question of how do we clear these backlogs in the next 2-3 years? Because there's a problem of economic mismanagement. There's a problem of low economic productivity as well.
So how do you think the weakening of the Naira impact businesses, both large and small, across the country? I think we need to look at that, because I know that for businesses, they have to have enough of the Naira, to exchange for the dollar. Talk to us about that.
Yes, it just means that the cost of doing business, the cost of production, the cost of sourcing the dollars would be much more expensive. Safe to say that even on areas that have nothing to do with dollars, you also see the cost going up, because rise in prices always have a ripple effect on every local economy. So if prices are rising significantly because of a major issue in that local economy, stakeholders will leverage on that to gain what we term as abnormal profits. An abnormal profit because they also want to be able to hedge against the risk of possible increased cost of business on their own bottom line or on their own production line, even if it hasn't reached them yet. All right. So you have that moving risk dynamics of where we are right now with the local currency. However, it's impacting. It's impacting on, if you take, for instance, bread. Producers are having to buy flour and wheat and all of those things at more expensive, the sugar at more expensive rates. And that would mean that the cost of producing bread is going to go up. And once the cost of producing bread goes up, it means that the cost per unit of bread is also going to go up. So many consumers will have to buy bread at more expensive prices. So there is a ripple effect of transfer costs of doing business on the average consumer, which automatically increases the cost of living, meaning people will have to spend more money to have to get a life, to have to live day by day, to even have to survive. Transportation will increase and all those things because of the multi-layer of stakeholders who are dealing from the production and supply end and who need FX to facilitate the supply of goods and services to the demand side market. So it's a very ripple effect, strong ripple effect impact.
Let's talk about the role of the fiscal policy. I know monetary policy, authority has been, doing a lot in that regard. But what role can fiscal, and monetary policy play in tackling the issue of a weakening Naira? There has to be some synergy, isn't it?
Yes. First of all, it's important within the short term that policies are being rolled out with a level of understanding, and they are being paced in terms of its execution, no matter how urgent the policy is, with that level of understanding as well. That's because of the complex trade-off that the Nigerian and the Nigerian economy is faced with right now. So take, for instance, fuel subsidy, what's going to happen? Cost of transportation go up. Cost of transportation goes up, cost of business goes up. Cost of business goes up, cost of living goes up. So you want to think of, before you take a policy stance, have a review with the monetary authorities to say, what's the impact of this policy? If that policy must be taken, if that policy decision must be taken immediately by virtue of, let's say our revenue situation now when it comes to debt servicing and all that, and not being able to pay subsidies, then we need to have a clear-faced, actionable plan to deliver it. And what other particular interventions can go along with the policy to cushion the effect on critical stakeholder blocks that would be likely impacted or affected. So there has to be, because what we've seen over time is that the fiscal authorities have rolled out policies that shows to us that they lack a proper understanding of how the Nigerian economy works, and probably a disjointed relationship, with the monetary institution, or not necessarily a cordial and a mutual beneficial relationship. So there needs to be a mutual beneficial relationship. However, we're also seeing that the cluster of stakeholders right now within the fiscal and monetary space, it looks as though there is an already existing prior relationship before they even came to this context. You want to think of Cardoso, Edo, and President Bola Ahmed Tinubu, the three people that have had that relationship going together for a long time before they emerged at the different places of power they are right now. So, and those relationships goes a lot it goes a long way in managing the dynamics of the local economy anywhere in the world. So we're hoping that they will be able to leverage their three-way understanding to facilitate new waves of intelligent policies that can be well paced into the mainstream economy. That is extremely crucial as a low-hanging fruit right now in the Nigerian economy.
Just a quick one before I finally let you go. We've always talked about the need to diversify the economy from its dependence on oil export. But on the other hand, exports also contribute to the country's foreign reserve. So how do you think the government can create a balance here?
Well, the economy is already diversified as far as I'm concerned, because you have 94% of the economy on non-oil already. That's a huge representation. And out of that 94%, give or take, overall on GDP outlook, you have 52% of the Nigerian economy services driven. All right, so if you look at it clearly, the oil sector holds about 5%. So what we need to diversify is no longer the economy. It's already diversified. What we now need to diversify is the revenue base, the revenue structure. And that's because we've not been able to properly organize economic activities in the services sector, number one. Secondly, we've not been able to also organize an all non-oil sector to maximize its revenue potential, not by chasing SMEs to pay more taxes, but by supporting them to do good business and to help them export or access new markets or make the most of the existing market, which is very critical. So what we have today is a very gross unproductive state of non-oil sector in terms of participating in the government revenue drive or FX receipts drive. So we need to do more around diversifying the economy base for revenue than diversifying the economy, because the economy is already diversified.
Well, I think a good place to leave it. Thank you so much for your time. Development economist, Mr. Gospel Ovele, thank you for your time.
Thank you very much. Thank you for having me, sir. Really appreciate the opportunity as well.
Well, I think that's our show for this week. Thank you for your time. I am Frank Omalape. I'll see you again.